Okay, before I crack on with all the analysis and some trade ideas, I'm going to work through my trade signals sheet for you. I have had one or two people ask me, will I be doing an offer in the webinar? I wasn't going to, but I really should. So one or two people have asked if I will do a discount on the subscription for the beginning of the year. So here you go. I don't know if you can see that screen. I'm not quite sure what I've shared or not shared, but the Forex signals package, which is the most popular package, is normally £125. I'm going to drop it again to 99. I have done that a few times lately, but this has to be the last time I do it. So I'm doing it only for the webinar. If you go to my website, you'll see that it's on sale for 99 quid for the next 2 days, and you will get that price for the whole life of your subscription. If you sign up and after 2 weeks you think, you know what, this just isn't for me, I'll cancel it for free anyway and give you a refund. So there's no risk. If you're thinking about it but you're not sure, just sign up. There's no risk whatsoever. If you can see that page, then you'll know what I'm looking at. I'll put a link in the description box below anyway, so you can find it. And if you haven't signed up for my 5-day challenge, hopefully most of you have, I will also put a link for that 5-day challenge. It's free. You get 5 videos. This is to really help you with your trading psychology. I think people have found it really useful. So please do sign up. And let's crack on. So what I'm going to do today is go through my trade signals sheet. This is what, if you do sign up, this is what you get. So by about 4 o'clock in the morning, you get full analysis on gold, silver, oil. It's about 4 a.m. UK time. And then you get this trade sheet. So it's one of my subscribers redesigned it for me, actually. So I'm very grateful to Kate. The buys are at the top. The sells are at the bottom. I give you the buy level. I give you a little range. We'll talk about that in a minute. Where to stop out if the market drops below. Some targets. Usually 3 targets, sometimes 2 targets. We've not got a lot of movement in the market at the moment, so I'm happy just to put 2 targets in. And I put my short-term trend down there. The reason I put that is because I'm a trend follower. So for me, the most important thing that I look at before I think about a trade is am I trading in the direction of the trend? Now, unfortunately, at the moment, you'll see sideways a lot because we have been in sideways trends for just so long, and it doesn't make life easy. It's lovely when you just see a market moving up and you know, right, if it comes back, I'll buy it at a support level. If the first support level doesn't work, not a problem. I'll just get in at the second support level because sooner or later I'll catch the trend and up we go and I'll be on a winning trade and I can just sit back and relax. But there isn't a lot of that at the moment, which actually might make my service more valuable. If you're really struggling to find levels to trade, then hopefully I can really help you out. Okay, so we're going to start actually with gold, because that's usually one of the favorites that I do. I've got it on the screen. So first thing I'm looking at is the trend. Well, if you go to the daily chart, really, if you go back to 2020, you can see that we're only in a sideways trend. So I really have to zoom in and isolate. And it's been confusing lately because look, we broke above this, what I thought was a triple top, and I thought might send the market down. We burst through it and it really looked like we were going. That was on one day. And then we just crashed, reversed. We've retested it again and come back down. I'm not going to take that as negative just yet, although it could be because we're just not breaking up. Despite the fact that the Fed are talking about interest rate cuts, we're still not breaking up. So I am a little bit wary that gold might be in for a significant move to the downside, but I'm not seeing anything telling me to sell it just yet. So for now, I'm going to stay with the bull trend because at the end of the day, since October, we do have higher highs and higher lows. Each trough is higher than the previous one. Each peak is higher than this peak isn't higher than the previous one, but we have something of a bull trend. It's a weak one. Even the moving averages are really flattening out now on the daily chart. So we've got to be careful, but the 50-day moving average is doing something of a job as a support level at the moment. We are getting oversold on the slow stochastic as well. So I'm just going to stick with a bullish bias at the moment until something happens otherwise. Okay, so for gold, the main thing is the 4-hour chart on the left here. I've isolated that bull trend again. I've put my Fibonacci levels on there. You can see the 0 line there. And then I like to break down my Fibonacci levels if I can. This is perfect. When I see a swing low in a bull trend around the 61.8% fib, I will put another set of fibs on there. I particularly like it because it was a good support level held by the 500 and the 200 period moving averages on the 4-hour chart. Now, it's getting a little bit more confusing as far as the moving averages go because, of course, the price keeps plunging through the moving averages on the 4-hour chart, and really they're not of any use to me at the moment anymore. And if I actually open this up on the hourly chart, you'll see that they're just of no use at all on the hourly chart. They're all over the place, and just not the 500 hour moving average is flatlining. We're just not getting anything from that. So the 1 hour chart is basically useless because of this sideways action. Right now, I'm going to depend on the fibs. I've got some Bollinger Bands on the 4 hour chart, which I use loosely, but the 100 period moving average on the 4 hour chart is of no use to me whatsoever. I've got some support down at 2010. On my trade sheet, I've got a buy level at, do I have it on here? No, sorry, I've got it on my report, but it wasn't strong enough for me to put it on the trade sheet. Actually, the levels are really weak at the moment. We did short at the beginning of, was it this week or was it? Yeah, it was last week. We shorted at 2057, 2062, which I have on the sheet again. So I'm looking for it to move up at the moment and just test a resistance level there. On the downside, there is a little bit of support around 2012, 2008. It's not the strongest level in the world. I'm mostly basing it on the fib levels that I've got here. There's 3 fib levels that I've got overlapping on there. And I'm also basing it on the swing high that we had in October. There are no moving averages. There isn't really a trend line for me to go on. I don't think this trend line is relevant, is it? Let me just check. Yeah, it is actually. That one's more relevant than this one. So yeah, I'm glad I put that one on there. Okay, so there are 3 reasons to buy at that level. I've got a trend line. It's only 2 months old, but I've got a confluence of fib levels. I've got a swing high from October, November. I've got a swing low here at the beginning of December. It's not the strongest argument for a buy level in gold, but we also have the 50-day moving average around there, the black line. So, and when we did retest, we did get up to 2016 and bounced. So someone around there is looking to buy gold, and we're getting oversold now, which we weren't that oversold on the last dip towards that level. I'm talking myself into this trade. I think it's worth giving it a go. So sort of 2012, 2010 looks like a support level. I'd say a break below 2005 would probably be enough of a stop. I'm just going to check what I wrote in my analysis to my subscribers this morning for gold. What was the exact level that I put in here? I had 2017, 2012, actually. I had it a little bit higher than I've just been talking about. For tomorrow, I'd probably revise that down. I'm not quite sure why I had it up so high. Well, we haven't got anywhere near it today. I probably will revise that down tomorrow to about sort of 2015, 2010, stop below 2005. So that's my level. I've got a resistance level at 2057, 2062. I put a buy and a sell level in there. I don't often do that because obviously as a trend follower, I'm looking to buy into a bull trend, but I've got a feeling we're going to have a period of sideways action. It's just a feeling. I've got nothing really to base it on. I mean, we are sort of flattening out now anyway. So those are my 2 levels that I'm focused on, but I will admit it's a bit of a struggle. Silver is actually even worse as far as trends go. Look at the daily chart on the right here. That is just awful. On the daily chart, the 500 day moving average has been flatlining now for, nearly a year. The moving averages are just all over the place. They're not indicating any trend whatsoever because of course we don't have one. I have put something on the chart here on my trade ideas sheet. Support down here because it's a 61.8% fib and a 50-day moving average, and I do have a trend line. So literally the only trade that I could really suggest down, what do I have it on the trade sheet? I have it at 22.65, 22.55, stop below 30. My targets are 23.0, 23.25. Not that ambitious, but considering we're in such a sideways trend, I think I would be happy if we hit those targets. I'm actually going to show, okay. Now I'm going to move on to the Forex markets. Shift my screen a little bit. There we go. I'm going to show you the New Zealand dollar, Japanese yen, because it's one that I always keep an eye on. But having said that, it's not something I can really trade at the moment. But I'm going to show you stuff that I can't trade and why I can't trade it, not just the stuff that I am trading. So yeah, this is can loosely be described as a bull trend, but we're in kind of no man's land here. I would need us to come back to support levels for me to buy in, and it's just not doing anything recently. So I'm leaving it alone. On the 4 hour chart, I've got us caught in it with littered it with trend lines, trying to find some reason to trade it. But we're caught in this channel and we've been just hovering around the middle of it since July. So really for the New Zealand dollar versus Japanese yen, I've got no clue, and I am just leaving it alone. You got to know when not to trade. And as far as I'm concerned, this is something that I don't want to trade. Let's do the euro. Again, euro, well, I'll show you the dollar index chart in a minute, actually, which is basically a mirror image of the euro versus the dollar. And as you can see, we're trading now where we were literally a year ago. We've gone up a bit and down a bit and up a bit and down a bit, but we've basically gone nowhere. Let me see. January the 2nd, we were trading, we were trading around, the high was 109.39 and we're trading 109.54. So we really haven't gone anywhere in a year. So again, it's not making it easy for me. I have to focus on the short-term chart. The only thing I can really look at is the chart going back to October, so 3 months, and we're in a bull trend. So I have a buy level. Again, not really the kind of criteria I like for a trade, but I've got a trend line here and it's just above the Fibonacci confluence area. So I've got a buy level in at 108.85, 108.65. And I have got a sell level. I've got a bit more confidence in the sell level, actually, which is around 109. Where do I have it now? 109.70, 109.90. And that's really because we've got some peaks just above that area. I've got the 100 period moving average on the 4-hour chart. I've got a bit of a trend line there. So I would be willing to give that a go. My stop for that trade is at 110.50. So I've got like if you take the middle of the range, I've got a 35 pip stop. Well, oh yeah, the other reason I've got that buy level in is because on the daily chart, I've got some moving averages. I've got the 50-day moving average on there. So tricky, sideways, don't like it. But, that's I've got to pick some trades. So that's what I've done. This is quite interesting. Watch the pound versus the Aussie. Obviously, if you're a subscriber, I'll remind you of this. Oh no, sorry, not the pound versus Aussie. There's another one. There's quite a good head and shoulders pair. It is a sterling pair, and I'll find it in a minute. Thing in the YouTube video, but that doesn't matter. Actually, I'm going to run over it again because it's an important point. One of the viewers asked me about moving averages. Is it important for me if I have moving averages? If in a bull trend I'm looking to buy into a bull trend, is it important for me to have the price trading above the moving averages? And it is. I just want to go over it again because what I would really like is for the 50 to be powering away, the 100 to be turning around and following it, the 200 not far behind, or moving in an upward direction, confirming that we're in a bull trend. Now, we do have that on the 4-hour chart. So the 4-hour chart, although they're flatlining a little bit on cable, I feel a bit more confident that, at least the 50 is holding above the 100. At least the 100 is holding above the 200. And at least the 200 is holding above the 500. Those are positive indicators for cable. And the price is holding above all of them. If you are thinking, I want to start getting short the dollar, maybe because you think the Fed will cut rates this year or whatever, and you're looking for a swing trade, I would say that buying cable on that criteria would be, I would be happy to start nibbling away at a long position in cable on that basis. This is something I get asked a lot. So on my trade sheet, I have a stop below. Why do I not give you that is actually, you could take that as the exact stop level. I kind of have this thing in my head where I don't want everyone, and I don't have, loads of subscribers. It's not like I've got thousands, but I just sort of feel that we shouldn't all have our stop in at exactly the same price. So, this is, in some ways, this is a guide because most of you do your own analysis and you use me as a sort of build your confidence, and you use me to sort of reinforce what you're seeing. So I think a lot of you, you'll look for your own idea, then you'll look and see what I've got and you think, okay, he's got the same idea. I'm happy to go with it. So, but anyway, if you, for gold, 5 pips is more than enough. 3 or 4 is certainly good enough. And if you just want to put your stop bang on my level, that's absolutely fine as well. Sometimes we do overshoot, and sometimes it's frustrating. We overshoot, we get stopped, the market reverses. I don't have a crystal ball. I may have nearly 40 years experience, but I still experience the problems that all traders have, where sometimes we just overrun and reverse, or we don't quite hit the entry point and turn around. I've widened my ranges in it from about a year ago, because there is that FOMO thing, and people were saying to me, it gets close to your level and I really trust you and I really do think that it will bounce and I don't want to miss it. So people were getting in some of my trades too early. So what I did was I widened the range out, and hopefully if you stick within that range, you'll still have a decent, low enough risk to make the trade worth taking compared to the targets that I give you. There's no point in risking 30 pips to make 30 pips. You're not going to make money in the long run. I would have to be 70% right all the time, and I'm not 70% right all the time. So what you need to do is make sure you're risking maybe 30 pips to make at least 60, and I mean, we do have those 100 pip winners. We have them all the time. We haven't had one in the last week. It's been too difficult. And the sideways markets don't help us. But when I do catch a trend, I do try and keep us in the trade for the 100 pips. So yeah, anyway, I hope that answers your question. But you must use the first target to trail your stop. Maybe take a small amount of profit. If you're feeling anxious and you're like, God, this is actually quite a nice profit for me. What you might want to do is take off 25% of the position just so you can breathe. And then if the market comes back to the entry point, you can jump back in again on that 25% of the position. But you could also trail your stop halfway to the entry point. So you've reduced your risk by half. You've taken a little bit of profit to ease the anxiety, and you've given yourself the option to jump back in on a bit of a scalp if we come back and do a retest, which of course we often do. So if you like being a bit more active and not just sitting there, that might be something that you want to do. But do save some other position for the second and maybe even the third target. If you've got some experience and you've got your own analysis and you think, no, I think we can really hit the third target, then you could take off, say, 2/3 of the position and run the other third or quarter to the third target in the hope of really maximizing your profit. Okay, I'm going to look at WTI. I want to make sure I don't miss that one. Oh, I think I didn't record this bit where I showed you this trade. I just want to make sure that you get it. GBP New Zealand dollar. Let me just go back to it. Yeah, okay. So on the trade sheet, just a quick recap. I've already done this with everyone in the room. Sell level 203.90, 204.10, stop above 204.40. We got some resistance level on the 4 hour. We got some resistance there on the 4 hour chart. Previous swing lows, 200 period moving average, confluence of Fibonacci levels. We're getting overbought on the daily chart as well. We are in something of a bear trend since October. So it's meeting most of my criteria to enter a trade. And seeing as I'm not inundated with trade ideas because we're not moving much and we are mostly moving sideways, this is a good enough opportunity for me to try. We have just jumped back up to 203.95. So when I talked to you, we were 20 pips lower. And I was saying, if we jump back up to the resistance level, you might want to give it a try. So if you're not a subscriber and you're watching this and you haven't got the trade on, you might want to give it a whirl. See if you want to give it a whirl. 40 pips stop to make up to 120 pips, really. So it's at least it could be a 3-to-1 risk reward if we were lucky enough to hit the third target. All right, I will move on to the Euro versus the New Zealand. Let me just see how that one's doing. I haven't checked it out. Just keeping an eye on the questions. Okay, again, this is horrible, really horrible. The chart on the daily chart is not really giving me anything. I'm basing my trade on the fact that we have been stuck in a range. We are holding the 23.6% fib. We are holding the 200 period moving average on the 4 hour chart. It's not a great trade idea, but I put it on there just because I have to look for trades that are holding a range, because there's very little in terms of bull trends and bear trends. So when that is the case, I have to find a range trade, and this is just a range trade. So that's why I've got it on there, but I'm not going to dwell on it because it's not very strong criteria. Right, now I've got to go to oil. Let me just move that up so I can get to oil. There we go. Okay, oil. That has been in, again, look, sick of saying it really, but it's just so sideways recently. Since 2022, we've just gone up a bit and down a bit, and longer term trend, can't really say there is one. Since September, we've been in a bear trend, so I'm sticking with that. After what John said, we're trading below all the moving averages on the daily chart. We're holding below the 50. We're holding the 23.6% fib on the bounce. I have had some sell levels there. If you've been selling it there, well done. You've done all right there, particularly on, when was it now? Was it Monday? What is it, Wednesday? So yeah, Monday was the good one, wasn't it? Monday was where we opened bang on my sell level and then we plunged. So if you were trading oil and you did well on that, I'm very happy to have helped you. Now what I'm talking about in my report is this triangle pattern. We're in a triangle and I'm struggling. I would still sell up around sort of 73.90, 74.00 because it's a fib level. It's the recent range high. It's the trend line. But down here, I just don't know what to do. I don't think I'd be buying it down here. So I think there's a risk that we break to the downside. But again, moving averages are flattening out on the 4 hour. We are trading below those. So again, that gives me a negative bias. And if we rally up, we'll be testing those trend lines. That's why I'd be willing to enter a short. On the 1 hour chart, it's absolutely hopeless. Moving averages are flatlining, so there's just no point. You only want to be looking at the 1 hour to really see what the short-term range is and maybe put some trend lines on to identify the range. I would be comfortable selling at the upper end of the recent range in oil. I wouldn't be comfortable buying at the lower end of the recent range. Okay, I don't rely on Bollinger Bands much. I've been experimenting with them lately because we are in such horrible ranges. I don't like them on the daily chart. I don't really like them on the hourly chart. I don't like them on the weekly chart. I'm playing with them on the 4-hour chart. If I'm looking for a reason to do a trade and the Bollinger Band is also like here, for example, can you see that? The Bollinger Band here on gold, the lower Bollinger Band is actually bang on that buy level that I have around 2010. So it gives me a little bit of extra confidence, but I sure would not be basing a trade solely on the Bollinger Band. I mean, they work 50-50. They work 50% of the time. They're just not very reliable. And it really has been desperation to try and find a tool that will help me trade these sideways ranges. So, and even looking there in gold, which is in the sideways range, I mean, the Bollinger Bands have been useless. So I don't really know why I'm using them. Maybe I'll just take them off. Okay. I so many times over the last 15, 20 years, I thought, I'm going to go back to Bollinger Bands. And you know what? I always end up taking them off. They never really work consistently enough. Last question. When you start your analysis on a pair and you look for a trend, which chart can you start? Okay. Good question, Duncan. Right. The longer term. Okay. The 4-hour chart is my go-to chart. It's just a time period that works for me. I'm trying to find trades that I can hold for a few hours, maybe overnight, because that's the only way I'm going to get my 100 pips out of a trade. You're unlikely to be able to nick 100 pips on a move in one day. So the 4-hour chart is the one that really kind of works for me within that time frame. And that's the trend that I will probably focus on. I will watch the daily chart because you don't know when you're about to go and hit a resistance level that the banks are looking at or the hedge funds are looking at, because they're not bothered about the 4-hour chart. They're bothered about the daily, the weekly, the monthly. So you have to do that. And you have to look at the weekly chart as well. Cable's actually a really good example of why you have to look at the weekly chart. Let me try and find that for you. Loads. Just want to run through it real quick. Cable weekly chart. So when Cable was running up nicely here, as you can see, all looked pretty good. Cable was in a bull trend. Then when you go out on the weekly chart, you suddenly realize, we're actually in this enormous bear trend. We have been for, a decade and a half. We're only touching the 23.6% figure and the 38.2. We're only just touching the red 200-week moving average. We're getting close to a trend line that goes all the way back to 20. When you look at this, you would be looking to sell Cable eventually and get into a short position and run it when you look at the weekly chart. So if you're just focused on the 4-hour chart and you're like, this is nice, we're in a bull trend, I've got to keep buying. Every time we come down, I'm just going to keep buying it. You'd have missed the most important point, that we're in a longer term bear trend. That's back to the daily chart, which now I don't really know what to do with it. But there you go. I think we're coming to the end, really. Is there any other? So basically, Duncan, I will look at longer term time frames. I must do, but I will mostly base a trade on the 4-hour chart. I will mostly follow the trend on the 4-hour chart. I do look at the 1-hour chart, especially when we're trending a bit more. Right now, we're not. So I'm not really focused on that one at the moment. When we've got a really strong trend, the 1-hour chart is really good because the moving averages are obviously keeping up with the price a bit more. So they become quite reliable. You might dip to the 100-hour moving average and I'd be like, that's good enough for me. Let's just jump in. If it combines with a trend line and a fib, I'd be like, I'm keen to get in here. But in sideways ranges, it's not much use. It's my definition of a trend. Well, it's not really my definition of a trend. I think it's more of a what time period do I look at a trend for, I think is really the answer to the question, which I've already gone through. When do you look at your analysis? I'm in Thailand, so I'm 7 hours ahead of the UK, and I think most of my subscribers are from the UK. So I start about 8, I finish about 10. 10 o'clock is about 3 in the morning UK time, 3 a.m. GMT right now. So I've usually got the analysis out by at least 3 a.m. GMT, often 2 a.m. GMT. So because I do have subscribers in Australia and I do have them in Singapore and I think I've got 1 or 2 in Thailand. So I do have some in Asia and I definitely have some in the Middle East. So I think me being able to throw things out at that time, I've got India, Pakistan as well. So me throwing it out at 3 a.m. GMT means most people can catch me. And it doesn't matter if you're waking up, 4 hours after I've done the analysis. My signals are not time specific. You don't have to be up at 3 a.m. I mean, the orders may get triggered at 3 a.m., but I'm not looking for orders to fill at that time of the day. I'm purely looking at levels that I would trade, and they may not trade for 2 days. They may not trade at all, of course. So don't think, oh God, if I subscribe to this, I've got to be up at 3 a.m. You don't. I've got subscribers in America as well who, well, some of them might be catching my signals before they go to bed. They'll put their orders in, go to bed and wake up and see what they've done. Okay. But I literally have right across the globe. So my orders are not supposed to be timed specifically for a particular region. So I've run through all my trade ideas. Right. Don't forget that you can get that £99 deal for the FX signals. It will literally be the last time. It's only there for 48 hours. The link is in the box below. I'll also put the link to my 5-day challenge if you haven't done it. And always ask me questions. All my contact details are on my website. So if you want to ask me questions, if you want to have a chat about markets, contact me, please. Thanks very much for joining me today.